All right, so welcome everybody. This week I am going to be discussing short-term versus long-term, right? I call it the short-term versus long-term strategy. You can call it goals, whichever, but it's really short-term versus long-term, right? And the reason for that is it's very easy to lose sight of where you're going. And the past few sessions that I've done, you've seen where I've talked about the importance of knowing yourself. I've talked about the importance of knowing quality versus quantity. And as you can see, as you move forward towards financial wealth, wealth in itself encompasses a lot, which has to do with yourself and your own personal goals. And so today we're kind of looking at how can you put these things into buckets. So the first thing is knowing yourself, right? And knowing your vision. We had mentioned before about the vision plan and having a vision board and those type of things. And we've also talked about knowing yourself, knowing what are your true values, what are your core values. And this is now breaking those up into a time period, right? Because going ahead and not having goals is pointless, right? And this is one of the reasons why you'll go ahead and see athletes make millions of dollars go broke. You will hear about people winning the lottery and then go broke, right? Everyone says, oh, they just need to know, learn how to manage their money. Well, a big part of it is they had no goals outside of that short term. The man who played the lottery, go ahead, his short-term goal is to win the lottery. His next goal is still a short-term goal, which is to buy up as much material things as possible. And then that's it. Like there was nothing after that. So once you reach after that, he don't know what else to do with his money. And then it goes downhill. When you look at boxers, look at even Tyson, height of his career, everything is going really good. What happened? Short-term goals. He goes by a tiger, right? He go by a tiger, buy mansions all around the place. Have no thought to, maybe one day I won't be a boxer anymore. And so I need to start planning for when I'm not a boxer anymore, right? You have some people who came out lucky in the whole thing, right? Like for instance, Jordan. Jordan actually had a gambling problem, which was extremely bad for a extremely bad short term. But what happened? Because of good old Nike and the Jordan franchise, that kind of kept him afloat. So that's why I say he got lucky in that regard, right? But many of them end up after their big sports career and everybody's all la la la, they end up with nothing later on. That's the same thing with music artists and all that. When they're making it, all of their goals are immediate goals and short-term goals, and there's nothing for in the future, right? So it's important for you to have both a short-term and a long-term strategy, and make sure that those strategies align with your overall vision, right? Because you still, whether in the short term or the long term, you still want to stay true to yourself, right? As I said, you spend money on what you enjoy, right? So let us say you have a friend and their short-term goal is to go to Dream Weekend. Well, your short-term goal is that you want to get your master's, right? Don't go ahead and give up on your short-term goal of getting a master's so you can hang out with your friend at Dream Weekend, right? Because at the end of it, you're going to be dealing with a whole bunch of regret. You're going to be out a lot of money, and you're going to be there laying down saying, man, I should have went ahead and got my master's. So knowing yourself and knowing your own plan is very important. So your goals as I touched on before, your goals are personal to you, right? There's nothing wrong in, as I gave the example with the masters and the dream weekend, there's nothing wrong in having your goals different from other people, right? That is how we end up choosing friends. That's how we end up choosing who we hang out with, right? You want to align yourself when people say, oh, like-minded people, evenly yoked, and those things. What you're really talking about is people who share a same vision for you, right? So if you are hanging out with friends and they're all about the party, but you are not, that friendship is going to get toxic very easy. If you're all about saving, looking forward to the future, but you have a spouse that is spending everything on anything she can find, that's going to be very short-lived, right? So you want people that when you go ahead and say, you know, I'm thinking about doing this, even if they say, you know, I was going to do that, they're kind of in line enough that you guys can still hang out and still talk, right? So it's always good to have others who with similar visions, right? It doesn't have to be the exact same thing, right? It doesn't have to be cookie cutter, but people with similar visions to hang around with and to help motivate you, because you're going to have times that you're going to meet up on roadblocks and you're not going to want to continue. And when you have someone with a contradictory vision than you, they're actually going to be the first ones to say, yeah, man, you should give it up. You should give it up. Don't even worry about that anymore, right? That's not who you want. You want that person that's going to be like, no, don't quit, push through, it's all right. Come next week, it will be better. Come next month, it will be better. Just keep on pushing through. Those are the type of people you want to align yourself with. So what are some of the examples, right? I already gave an example of short term, but you want to be specific, right? So short term, I want to purchase a car within the next 3 years, right? I want to get a promotion in the next year. I want to take a trip to a new place next year. I want to have $5,000 in 1 year. You realize those are very specific, right? It's not, oh, I want to be successful. That is a stupid goal. That's a stupid goal. That's just very general. I want to be successful. Well, people have different benchmarks for being successful. What is your benchmark? What is it that you are setting aside to do? In 3 years, I must have a new car. By next year, I must have a promotion. Next year, I must take a trip. I must have $5,000 inside my account next year. So next year, when you look, you have exactly what your benchmark is. Did I achieve my promotion? No. Why? Is it that I need to work harder? Is it that I need to change jobs? You have something to evaluate yourself by, right? And so that is very important. You're going to apply those same things to the long-term goals. What's your long-term goals? I want to purchase a home. I want to pay for my kids' college. I want to be debt-free. I want to travel the world, right? Be specific on what you want, right? And don't just put it in, think about it right now and say, oh yeah, that's my short term, that's my long term. Write it down, put it somewhere that in those times when you're not sure which way is up, look at it and get yourself realigned to what is your goal, okay? All right, so I touched on it before, which is check your progress along the way, right? If you want to go ahead and buy a home, do not wait until when it is time to buy a home, and then that is when you say, oh, I'm going to buy a home. Chances are there's a lot of things that you're not going to end up knowing. You're going to get hit with a lot of costs that maybe you could have avoided. You're probably going to end up getting hit with a higher interest rate than what you could have avoided. People are going to take you through the ringer, which is what you could have avoided, right? All because you now turn something that was a medium and long-term goal into a short-term goal, right? But does that mean that because buying a home is a long-term goal, you're not going to do anything until that time? No, you break it down. Some of the things can be short-term goals. One, open up an account specific for saving for that home, right? It's not that you're going to go ahead and buy the home cash, right? But if you did have the money to do that, that would be awesome, right? Let's go SHIB, right? Okay, but those who are into crypto know about that plug I just did. So the other thing, so you want to open up an account specifically for saving for that, right? You want to determine what is the amount of down payment that you're looking for, right? Are you looking for 300,000 US? Are you looking for 30,000 US? It's gonna be around the 30,000, 40,000 US, right? You've determined how much down payment you need. Then now you're going to say, okay, when do I need to have it? And how much do I need to put away each month towards achieving that goal, right? And then in order to determine how well you're doing, you're going to gauge it on an annual basis to make sure you're moving towards that goal. So even though it's a long-term goal, you realize that there's things in the short term and the medium term that you need to do in order to make sure that you stay on track. As I said, be very specific. There is nothing, the worst goals are the general goals, right? Oh, I would like to have a home like that one day. Oh, I'd like to drive a car like that one day. Oh, I'd like to have a position like that one day. No, that is pointless. You're never going to achieve it with that attitude. You're not, right? Because when is one day, right? But is one day tomorrow? Is one day 10 years? Is one day 50 years? When is that, right? You need to set a goal. If you want to drive a car like that, right? You want to go ahead and buy Barabbas Mercedes. Yeah. Barabbas Mercedes makes the AMG seem like as if it's nothing, right? No, you go ahead and say you want that. Nothing is wrong in saying, okay, how much does it cost? How would I go about importing it, right? What is it that I would need to do in order to get it? And then set a timeline, right? Look at your life, say, I would never be able to afford a car like that on my salary. Okay, now you shift on to something else. Is it that you think you could get it if you got 1 or 2 promotions at your job? Or maybe you need to change your entire job. Maybe you even need to change the industry that you're in, right? And then now it goes even further. You want to change industry. Do you have the skills in order to change the industry? What is it that you would need to do? Be very specific, and that is how you're going to continue to move towards your goal, right? So to use the example regarding buying a home long term, opening up a savings account short term, talk to a mortgage lender short term, set annual savings for the goals medium term. But in Jamaica, a lot of times you have to get life insurance that I think they call it creditor's life insurance that essentially covers the value of the home, right? Look into what is it you need to get. That's medium or short term, right? It could be something that you say, okay, I'll look into it and next year I'll make the move. Then next year you make the move. If it's something that you say, you know, before the end of this year, I'm going to make sure I have that in place, then do it, right? But be specific and know exactly when is the time frame that you want each thing to take place. Then, you know, we always come back to money, right? Because that's what we're here for, right? After you've gone ahead and set out your extremely long to-do list for each of your goals, Do not, I know you heard me mention about savings account, open up an account. You know how I feel about bank accounts. Bank accounts is putting your money to sleep. And as I said, your money is a robot. Your money is programmed to earn more money. That is what your money is there to do. It is there to go and get you more money. So when you go ahead and put it inside a bank account, you are forcing that, you are unplugging that robot. You've taken that robot out of commission where it is not earning you any more money. And so then it becomes useless, right? If you take a robot out of commission, it's like, it's useless. You're scrapping it, right? So determine based off of whether or not it's a short-term, medium, or a long-term goal, how are you going to invest, right? So if it's a short-term goal, you want to buy a new car, you want to go to Dream Weekend, you want to do that, then go into something like trading or crypto, right? One, chances are you're not going to put a whole lot of money into it, right? Which is why it's on the shorter term. Two, it has the highest possibility of reaping a reward, right? So it will help with the short-term thing where you say, oh, I need to have X amount of money by next summer. Then the only way, or essentially the only way, I'll say essentially, because I'm sure there are other ways, right? But essentially the only way you're going to get that based off of the type of returns you can get is through trading or crypto, right? So crypto, short to medium, right? Stocks and bonds, that's medium to long. So you want to go ahead and buy a car, right? And you say the car is going to run me 30,000. When do you want to buy that car? I want to buy that car in 4 years. Take that 30,000, divide it by 4, divide it by 12, right? Well, let's use 5 years. You want to buy a new car in 5 years. So take it and divide it by, take the 40 and divide it by 60. And that is how much you need to put away each month for this new car. Where are you going to put that? Since it's further out, you can go ahead and put that into some stocks and bonds. What's that going to do? At the end of it, especially if it's stocks, if you do it right, you will achieve a return on your investment, right? You should achieve anywhere between 5 to 10% return on your investment year over year, right? You will also be receiving, and this is what you would get with bonds as well, is income via dividends or semi-annual payments, right? So at the end, you physically saved up 30,000 US. But when you look inside your investment portfolio, you could have anywhere between 35, 40, or even 50,000 sitting inside here, right? And at that point in time, you can take that money, some of the money, and go buy a car. So people say, Warren, but there are tons of people with money that go ahead and take out car loans each time, and you're telling me to use cash. You have to think of opportunity cost, right? If at that time you are earning essentially 8% year over year on your investment, but to go ahead and purchase that car, you could get a car loan for, let us say, 4% or 5%, right? It will suit you better to leave your money inside the investment, right? Because over time, it is paying you at a not much higher, at a higher rate than with the car, right? But when you're broke, there's no opportunity cost, right? It's just, this is what I can afford. So I need a car. And so if they're giving me 10%, I guess I'm gonna have to just do the 10%. So no, the reason why the reason why wealthy people sometimes take out loans for different things is because they weigh the opportunity cost of it. So if you reach to that stage, and when you look at the opportunity cost and you say, you know, I'm actually making more money leaving this money inside of the investment than if I was to take it out and just pay off the car cash, then leave it inside there. At least you're still ahead of the game, right? Not many people have $30,000, 30,000 US just sitting inside an account. So you're still ahead of the game, right? So that's stocks and bonds. Mutual funds, long term. If you want, and mutual funds tend to almost be on the line of bonds. I mean, everybody talks about the financial crisis and those things and how many people lost money off of mutual funds. So there is some risk, but usually for you to lose off of mutual funds, right? Especially if you pick good ones, right? I'm not going to necessarily do any plugs on that one, but you have some very good ones out there, right? You're going to get a positive yield each year, right? And so if you're using that to, let us say, save for your home, that will aid in speeding up the process of you getting your home, right? The last one here is insurance. People say you invest in insurance. Yes, insurance has a cash portion to it, right? And over time, you can actually increase the amount of insurance that you have, which in turn will increase the amount of cash value that you have on it. Little did you know, not a lot of people, maybe a lot of people, but people out there actually go ahead, take out loans and use the insurance as collateral for the loan. So if over time you've built up a pretty good sum on your insurance, not only is it there for when you die or whatever, it can also help you throughout your life, right? So that is my thing. So do not go ahead and say, oh, need to go ahead and save. Let me open up a savings account that is going to give me 0.001% and then say I'm saving up for a house. That's the you might as well put it underneath your mattress. Just put it underneath your mattress, right? All right. So to sum up everything, right? Know exactly what you want and when you want it, right? So last week we touched on your vision board. Well, no, week before last week, we touched on your vision board and knowing what is it that you want out of life, right? So great, you've sat down, you've done that. Now, when do you want to achieve these different things, right? That's the stage you're at now. You know yourself, you know the type of stuff that you want to have, you've envisioned everything all around you. This is now the time that you start putting dates to things, right? Then determine the financial strategy. Oh, typo. The financial strategy that's going to essentially aid you into doing that. Which is what we talked about on the previous slide. Take, for instance, I say, I would love if my investments paid for my groceries each month. Am I going to go ahead and invest in stocks and bonds to pay my groceries? No. I'm going to go ahead and try and go after something that's going to give me highest return. So I'm going to trade, right? And say, you know, I'll be happy with trading. Trading pays for my groceries. Great, right? I can now take that grocery money and put it into long term, right? Might say, you know, I would love to be able to buy my car with crypto. Cool. I have an idea of how long I want to save. Go ahead and buy. This is one of the reasons, well, crypto recently has been known as the car fund, right? Especially since so many people in crypto end up buying Lamborghinis off of Bitcoin, right? So it'll be great if you were saving for that $30,000 car, and then you wake up one morning and end up seeing something like 3-4 million in there. What? Barabbas, Mercedes, here I come, right? So have a strategy, right? And determine based off of that strategy should fit within the goals that you want. So don't do a short-term strategy for something long-term. I'm not going to save for retirement into trading. I'm not going to go ahead and save from a house into crypto, right? So you need to know how to do that. Don't let YOLO be your downfall. This is something you hear all the time. Oh, I'm going YOLO. And for the older folks on here, YOLO means you only live once, right? But the way how they use it is essentially, oh, screw responsibilities, screw everything else, YOLO, you might die tomorrow. Okay, technically, yes, you might die tomorrow. But then what happens if you don't? You spent off everything today, and tomorrow you're out there saying, oh, I probably shouldn't have spent off everything, right? YOLO with your experience, right? So if you always take a trip to Florida every year, right? And you already have the budget for that trip to Florida, go YOLO. Take a trip to St. Lucia, take a trip to the Barbados, go somewhere you've never gone before. That's YOLO, right? But you're doing it with the same budget, right? So you're not hurting. So do not give up long-term goals in order for short-term pleasure, right? So don't go ahead and say, well, I have this, you know, much money I have saved up because I was saving up for this house. Man, this car looks real good. The car is too short term. Do not pull off of your house to go buy a car. Car is its own thing, right? Do not pull off of your car in order to take a trip. Car is its own thing. If you want a trip, save for a trip, right? That is how you do it. Then finally, make sure everything that you do is in line with your vision. I mentioned that a lot because your vision is not something I or anybody else can tell you, right? If you have a vision, you have your own vision, and that is what you have to work towards. All right. So guys, thank you so much for coming out. If there's any questions or comments that you guys have, you guys can either comment on the video. I'm going to upload it this Sunday, or you can send me an email. Be sure to subscribe to my channel and like the video. And I appreciate all of the comments and the support that I get each week. So continue, and I will see you guys next week. Bye.